In this video, I'm going to show you how to properly identify liquidity on your chart. So first of all, I'm going to start with the basic concept of what liquidity is and how to identify liquidity on your Forex chart and how to enter trades after spotting liquidity on your chart. So definitely watch this video to the very end. If this is your first time here, my name is Paradise. On this channel, I talk about everything about Forex, technical analysis, and day trading strategy to make you profitable. Don't forget to support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more updates like this. Also, check the channel for other Forex videos and educational content. Okay, what is liquidity? So you can simply put liquidity is equal to money. Let's say, for example, if you have 500 pen that you want to sell, either you want to retail those pen or you want to sell it in wholesale or in bulk anyway. So if you have the pen at hand and you want to sell the pen, definitely you are going to go to where you want to exchange your pen for their money. Okay, so it means that there is liquidity at that very point where sellers are. Exact same thing happened in the market. The same thing happened to buying. Okay, if you want to buy something, you go to where there are sellers. Okay, and so therefore where there are sellers are people that have what you want to buy so that you can exchange for it. So that is exact same thing that happened in the market as well. So let's say, for example, on this very chart, I want to give a very critical diagram of how liquidity work in the market. If the market, for example, is moving upward and come back down, just like the markets move in the markets, creating higher highs and higher lows in this formation, what that means is that market is in an uptrend. Okay, so at every point right here is a liquidity. Right here there is a liquidity at this very point, there's a liquidity at this very area, there is a liquidity at this very point, there is a liquidity here, and there's also a liquidity at this very area. One of the most important way to identify liquidity early in the market is considering old highs and old lows. So I mean old highs, okay, and old lows on your chart. So once you can identify the old high and old low on your chart, it will help you identify liquidity in the market. Now, still on this concept explanation, there is something very important right here. Let's say, for example, markets move upward and then come back right down. What the smart money does is that that if the market should move upward from here to the upside, it is better for them to buy at a discount price. That means it is better for them to buy at this very point than buying at this very area. So let's say, for example, this very area is $10 and this very area is $20. It is better for them to move the market downward a little bit and buy at discount price, which is at $10, than buying at this very point, which is at $20. You know that in every market, when the market begins to move from here, let's say there are buyers that buy the market from this very point, and buying from this very point means that there are other buy orders, okay, and also stop losses everywhere around this very point. Okay, so what the smart money does is that they move the market a little bit downward, okay, below the very low that you see at this very point, taking out all the stop losses at this very point before moving the market to the upside. What that means is that, let's say, for example, a smart money guy with a $5 billion just come into the market. They will not just buy the market at this very point or at this very area or at this very point. They will look for where there is enough sellers to fill their order of $5 billion. So at that point, they have the liquidity to get from the market before moving the market to the upside. So what will happen right here is for them to move the market to where their $5 billion can be filled, which is where your stop loss are around this very area, together with limit orders, and then get those orders stopped out at this very point before moving the market to the upside. That is exact same thing that happen in the market every day. If you understand this concept about liquidity, then you can better position yourself in the market. Not only that, it will help you place appropriate and proper stop loss after entering accurately in the market. Now, this, like you all know, nothing works 100% of the time, but it will help you shape the trade entries and your directional bias when you want to enter the market. Now, if you want to identify liquidity on the chart, this is very important. You take from the old highs and old low, like I said, like on this very chart, I am on Euro USD 1-day chart right here. And if you look at this very area, there are area of liquidity on this very chart. And one important area of liquidity right here is at this very point. This is where we see the very peak of the market before the market begin to come back right to the downside. Now, before market come back to the downside, we have a liquidity at this very area as well, at this very point right at this place, and we have liquidity at this very area as well, at this very point, okay, on the chart. So there is liquidity at this very point. What that means is that there is money at this very area, there is money at this very point, there is money at this very area, and also there is money at this very point. But before you look at this very structural formation, you see the market, before it moved right down, from your normal understanding of market structure and creating higher highs and higher lows, we're supposed to see this market move a little bit to this very area and then see continuation from here to the upside. But that did not happen in this very case. Market come back down a little bit and grab liquidity from this very area. Okay, so you know that every stop losses at this very point for people that have pending orders at this very area, likely their stop loss will just be below that pending orders. The market will get their limit order executed and then still come back right down to get them stopped out at this very point before moving the market to the upside. This is exact same thing that the smart money guys does in the markets every day. So if you can properly, number one, understand the concept, secondly, identify liquidity on your chart, and then know when liquidity is being grabbed in the market, and then better know when to enter the market in the right direction of the smart money. So what happened right here is that the market come back right down, grab liquidity at this very point, and begin to move to the upside. So after a liquidity grab, market begin to move upward on this very chart. If you look at this very area at this very point, market have not come back into this very point. There is a very strong liquidity at this very point on this very chart, and after this liquidity grab right here, we have another liquidity at this very point. So for me, if I should take a buy position on Euro USD on the 1-day chart, what I want to see on this very chart is for the market to come back down right here and grab liquidity from this very area. And then what I want to see after liquidity grab are some chart patterns, okay, that confirm that this market is going to begin to move to the upside. So what I have to do is, after the market move downward, I want to see a liquidity grab, because there is liquidity at this very point. So once the liquidity grab happen at this very area, I want to see certain patterns. And one of the patterns that you must have to pay attention to is a reduced momentum that follow double bottom formation in a downtrend or a fail swing. So if market move upward after liquidity grab and then come back down and form a double bottom formation, the market move up again, then it is certain that the market is going to move up, okay, to the upside. Now, this is not a guarantee, because there is nothing guaranteed in the market. Now, another pattern that you can also pay attention to after a liquidity grab, in this very case, markets have to grab liquidity from this very point to the downside, and I want to see a fail swing. What does that mean? market grab liquidity already. The next thing I want to see is market move upward and then come back down, fail to create a new low at this very area, then market is going to begin to move upward. So once I see some bullish momentum from this very area, then market is going to begin to move upward. This is where I want to start placing my buy order from. Okay, this is very, very important. So once you understand the concept of liquidity and how to identify liquidity, and once liquidity is being grabbed in the market, then you can properly enter your market or your trade in line with the smart money guys in the market. So this is very, very important. So I hope this video help you. Please don't forget to support this channel by leaving a like for this video, subscribe to the channel and turn on the bell notification for more updates like this. Also check the channel for other forex videos, educational content and technical analysis. If you have not registered with any broker yet, check the description of this video. You see my recommended broker and register right now. Thank you for watching today's video, and I will see you in the next video.